I will keep a private link to this just for the people who have registered so that you can go back and review the material for the next 2 months, and then the link will become inactive. So don't worry too much about taking a lot of notes. Do consider your learning style while you're doing this, but we have sent out 5 different handouts, and the handouts have some really good links in them that will refer you to the presentation. We will not be sharing the full slide deck. We do have the summary sheet. So the summary sheet is all of the different topics that we are talking about. You will see links to those in the PDF handouts. So without further ado, the person that you have been waiting to hear from, thank you, David, for joining us today.
Hey, thanks, Brock. Thanks for having me. And thanks to the team at AutismBC for putting this on. I know it's an important topic to many people, and I can certainly relate to that. Just say up front that I am not an accountant. I'm a parent, and I've been doing this for a long time. But I've learned quite a few things over the years. I've been doing this talk for families for probably a dozen years, give or take. I've gotten a lot of feedback over it, and I've learned a lot from everyone going through the experience. So what I will ask, if you guys have feedback for me afterwards, please pass it on. I'd love to hear it. I'd love to hear your stories and hear how it went for you. So this year I've split my talk into 2. Level 1 being how to apply for the disability tax credit, and the level 2, how to actually apply it and do your taxes every year. So tonight's talk is going under the assumption that the individual concerned does already have approval for the disability tax credit. If that's not the case, I would suggest that you attend one of my level 1 talks and learn how to apply for the disability tax credit. I'll be walking you through everything that you can put on your tax forms with respect to deductions, credits. I'll go through a practical example and show you how to put it on your taxes. And as Brock mentioned, there's no need to take notes. Everything should be in the handouts. For questions, I would prefer, just given the fact that we have quite a few people listening tonight, if you have your questions, you could put them in the chat. Feel free to go ahead, put it in now. And at the end of the presentation, I'll go through the list and I will stay as long as necessary to answer any questions that you may have. For anybody maybe hearing impaired, if you want subtitles, you go over to the 3 dots down at the bottom and select More, and you can turn on your subtitles for the event. Now, if you'll excuse me for 1 second, I'll just bring up the PowerPoint presentation and we will get going. Right, so today's topic, it's all about autism and taxes and what you can apply for. And when it comes right down to it, it's all about money. So this is where my journey started. This is my boy. He was about 20 months old when he was diagnosed with autism. And I'm sure it's a story that a lot of you can relate to. Something's wrong, you don't really know what. Life is a bit difficult, and when you get that diagnosis, you simply have no idea of the tsunami of information coming your way. You know, when he was first diagnosed, we had a lot on the go, getting the therapy going for him, you know, moving, and there's a lot of things that we had to take care of. Taxes were not something I had even considered, and it was about a year down the road when I first heard somebody mention that maybe taxes were applicable to autism. And there wasn't a lot of information about that at the time. And over the years, I've gradually learned a lot more. And this is where he is now. He's just about to go into the COBC system. And it's been quite a journey getting him there. When you do have a diagnosis of autism in the family, what I recommend is you put first things first. Put your family first, you put your child first, and worry about the taxes later. The reason for that is you can always backdate everything that is owed to you. So there's no rush to get this going. So as a parent for a boy with autism, one of the advantages to not being a financial professional is I've taken all the CRA doublespeak and I've tried my very best to put it into a simplified language for everyone to work through. So this is what tonight's presentation is all about. It's all about money and getting more of it. And one thing I can tell you about your family, and it doesn't matter who you are, where you're from, or how affected your child is, I can guarantee that you are feeling financial stress. Part of what this is about tonight is alleviating some of that financial stress. Now, how much money can you have coming to you? It's going to depend on your family circumstances, but in some cases, it's going to be a very considerable sum. Tonight is all about a do-it-yourself affair. You do not need an accountant to do any of this. With respect to autism, there's nothing that they can do that you can't do cheaper. I have talked to many, many families over the years. A lot of people were nervous about doing their own taxes. Once you go through the first tax filing, it becomes easier, and within a year or two, you will be a veteran, I guarantee it. Today's message, it's all about do it yourself. It's just getting the basics right, and the rest of it falls into place. It's really not that difficult a process. Once you learn the basics from me, and you'll visit a few tax-friendly websites, and then after that, you're off and away. Now, I do strongly recommend that you use tax software for this. I imagine there's very few people left to actually use a paper return. A lot of what I'm going to be talking about tonight, some of the deductions and the credits are linked, and claiming one may reduce another one. And this is something that is taken into account by all the major software packages. A few resources for you. A lot of what I'm talking about tonight is taken from the website asdfunding.com, which is a parent-run website all about funding in BC. Taxtips.ca is an accountant-run website. If you want to take a deep dive into anything I'm talking about tonight, that's a great place to learn about it. And of course, the Canada Revenue Agency has their own website. These addresses are on the handout. Our journey tonight starts with a letter from CRA approving the individual for the disability tax credit. And this is a point where people are quite relieved because it's been a long process getting there, and quite often takes a few months before CRA gets back to you. And in some cases, it can be considerably longer. On this letter, they tell you when the eligibility period is for the disability tax credit, and they also tell you when you need to apply for a new one. It's very important that you don't throw this letter away. What happens is years down the road, you'll be asking yourself, so when does this expire and when do I need to reapply? And you will have forgotten. One thing that is different now is you can look up the eligibility period on CRA My Account. So on this approval letter, it'll show you the tax years that the disability tax credit is valid for. For example, the tax years 2006 to 2021. The earlier year indicates how far back you can make a tax claim. And then the last year indicates that you need to reapply in that year. Knowing what we know now, we'll have another look at the letter, and under the yellow highlighting, it'll show you the eligibility period for the disability tax credit, 2006 to 2021. And the disability tax credit is more than just a non-refundable tax credit. It's also a gateway for many other things that you can apply for. The Registered Disability Savings Plan, enhanced medical expenses, and so highlighting, it tells you when you need to apply again using the form T2201, and that's for the 2022 tax year. I just went through this process myself, so in the latter part of 2021, I reapplied for the disability tax credit for my son, and we were approved from 2022. And in this case, they gave us an indefinite time period, which basically means it's approved forever unless they come back and say, we want more information or we want you to reapply. Once again, if you lose this letter, you can look up the information on CRA My Account. An important concept we're going to talk about tonight is backdating. And this is reaching into the past to claim some deductions and credits that you may have been eligible for. So you can go back up to 10 years or the first year of disability tax credit eligibility, whichever is the later. The big thing with backdating, of course, is money. And throughout this talk, it's going to become more obvious why backdating is so important. And backdating is going to apply to everything that I'm talking about tonight. So how do you backdate your taxes? It's actually a very simple process. You don't need an accountant to do this. You don't need a professional. All you need to do is send a letter to CRA with your request. You don't need to do any math. You don't need to quote line numbers. And there is a template letter in your handout. And all you're going to do is you're going to say, hey, CRA, this is my child. This is their SIN number. This is my SIN number. My child was approved for the disability tax credit effective the 2016. So I want to claim back the disability tax credit and all the other things I'm going to talk about tonight. Should you have a professional do your taxes? Well, not necessarily. A lot of people feel that they need an accountant to do this. They're expensive. They're very smart people, obviously. You may have to educate the accountant about autism. If you already use an accountant for tax services, there's no reason you need to change this. If you're running a business or perhaps English is your second language, an accountant may very well be appropriate for you. If you do your own taxes, there is no reason that that has to change. You can continue to do that. Other options, if you are low income, you may be able to go to a community volunteer tax preparer. For example, the Disability Alliance of BC does this. If you're going to do this, I would go somewhere where they are familiar with disabilities and how to make the claim. A pet peeve of mine are these so-called disability agencies. And if you go online, you Google disability tax credit, you'll find these great looking websites telling you that we are the experts. You don't know how to do this. You need our services to apply for all these things, all this backdating. We'll do that for you. They're going to take an awful lot of money from you. It could be anywhere from 30 to 50%. And I really recommend you stay away from them. There's nothing they can bring to the table to help you out. If you do go to a tax preparer to do your taxes, based on what you're learning tonight and going to the website asdfunding.com, you will find a tax checklist. And this will tell you all the things that you could claim. If you take this form, you print it out, and you tick the ones that are applicable to your child, and take this to your accountant or your tax preparer and go, here, this is what I want you to apply for. And that will help out. Don't expect to go into a mall kiosk and sit down and expect them to get everything that your child is entitled to. I just want to talk briefly about deductions versus credits because I always get questions about this. So a deduction is something that reduces your taxable income, and the tax saving may be as high as 54%. And an RRSP is the perfect example of the tax deduction. A tax credit, on the other hand, is something that reduces your taxes owing. The federal tax credit rate is 15%, and a good example of this one is the medical expense tax credit. And there may also be a provincial component. So if somebody tells you you have a $100 tax credit from the federal government, that is worth $15, so 15% of $100. Generally speaking, deductions are better, especially for higher incomes, but for the most part, you can't choose which ones are going to be deductions and which ones are going to be credit. The first one that I want to talk about tonight is the child disability benefit. And this is something that is going to start automatically on the disability tax credit approval. It's an addition to the Canada Child Benefit, that monthly fund that you get every month from the federal government, and it is a tax-free benefit. So how do you apply for it? Well, it's automatic, assuming, of course, that you are already getting the Canada Child Benefit. And if you have not yet applied for the Canada Child Benefit, you can do so at CRA My Account. Can the child disability benefit be backdated? Yes, absolutely it can. And after approval of the disability tax credit, the government is going to automatically, for the current and the 2 previous years, backdate it and put the money into your account. Now, prior to that, you can make a written request to the government. And this is simply a matter of a letter going, my child qualified for the disability tax credit from 2016. Could you please backdate the child disability benefit? How much is it worth? For a low-income house, it could be as much as $2,900 tax-free per year. And for a high-income household, the amount is reduced to zero. By high income, I mean about $160,000 per year. If you're getting $2,900 a year tax-free, you can imagine how valuable backdating would be. If you can go back as far as 10 years, that's a fair chunk of money coming your way. Now, moving on from there, talking about the disability amount. And this is a non-refundable tax credit, And it's also known as the disability tax credit. And this is the one you applied for in the first place. There is also a supplement to this for individuals under the age of 18. And if you are a taxpayer, in other words, your tax is above zero, the amount could be worth over $2,700 per year. And that includes a provincial component as well. And this is the one that you're going to apply for every year on your tax form. And I will show you later on in the presentation how to do this. The disability tax credit, it belongs to your child, and your child presumably has no income, and this non-refundable tax credit is of no value to them whatsoever because you cannot reduce your tax below zero. So yes, you can transfer it, and the term used is disability amount transferred from a dependent. And how do you do this? It's very easy to do using any of the major tax software. And why software? A lot of these credits are interconnected. They will help you choose which spouse should claim, and we'll do some examples of this later on. Can the disability tax credit be backdated? Why, yes, it can. Backdating is now automatic on request. On the form T2201 that you filled out, there is a small section you could tick to have the government automatically backdate the disability tax credit for all applicable years. I can't imagine any reason you would choose no. If you did choose no, all is not lost. You can certainly put in a letter and make a request for the government to backdate it. But the government will automatically make the calculation for you and put the funds into your bank account. A lot of us, especially if your child is profoundly affected by autism, there's a very good chance that you'll be spending more money than the government allots for therapy. And in some cases, you'll be spending a lot more money. Can you claim this on your taxes? Sort of. It is a medical expense. The problem is an ABA therapist is not what they call a licensed therapist. If you go through the tax guide, you won't find a ABA therapist in there anywhere. You may consider using the term tutoring. Now, I say this, if you look on the tax form, it says that therapy is a claimable medical expense, but it does not actually specify what the definition of therapy is. And a lot of people at CRA would take that to mean, well, a registered therapist would be licensed by a college, and an ABA therapist, a BI would not fall under that at all. I know some parents have claimed ABA therapy with no problem, but I would suggest that you consider using the term tutoring. What is tutoring? Right from the CRA guide, tutoring services used by a person with a learning disability or an impairment in mental functions. Tutoring now becomes a medical expense. The tutor must not be related to the individual, and a medical practitioner must certify that these services are necessary. So essentially, this sounds like everything that our BIs do for our kids. So we're simply taking what they do and we're calling it tutoring, and we're going to claim it as a medical expense. No double dipping. And what do I mean by that? if someone else is paying for therapy for your child, for example, the Autism Funding Unit, you can't then turn around and claim that as a medical expense. You can only claim what you have paid out of your pocket. It's the same principle with medical insurance. If medical insurance pays for something, you can't then turn around and claim it as a medical expense. The federal government does tend to be a bit anal about their paperwork. They specify that receipts and invoice must contain the following information. It must have the name of the tutor, their SIN number, the dates of service, the service rendered, for example, ABA tutoring, the signature of the tutor, and the receipt indicates paid. There is some sample invoices on your handout, and all this information is available at asdfunding.com. Here is the sample from a spreadsheet from that website that you can put together. If you're not a spreadsheet person, don't panic. There's no reason you need to do this. It does make it very easy, however, if you're familiar with spreadsheets. The first page being the invoice, and the second page being the receipt. If you're not a spreadsheet person, you could just get a very simple form. Once again, this is downloaded from asdfunding.com. This is just a daily service record. You can just fill it out and put the dates, the service, the hours, and that works very well as an invoice. For a receipt, you can go down to Staples and fill this out by hand and get the tutor to sign for it. If you're new to the world of paying for therapy for your child, one big tip I will give you is the rule at the end of the month is no signature, no check, no exceptions. If you're paying out of your pocket for therapy for your child, you get a receipt, get the BI to sign for it, and if they don't sign for it, you don't give them the check. Why do I say this? I see it happen all the time. Get to the tax time, parents start gathering up the receipts. They realize they're missing signatures. Meanwhile, their team is everywhere. Maybe one person's gone to Africa, another one has gotten pregnant and left the team, another one's gotten married. These things happen. It's so much easier to fill it out as they're getting paid. What should you not put on your invoices? You want to keep the information concise. Keep in mind that you're going to have this person at the tax office reading this and trying to understand what it is you're claiming. Don't put extra details on there that they don't need. For your BIs, generally speaking, if you have a BI on your home team, the parent usually is the one to control the information on the invoices. Your behavior consultant will generally provide their own invoice, and that's fine. But for everyone else, you can control the information. Years and years ago, I started off with that written daily service record. And during the team meeting, I would tell everybody, this is how to fill it out. This is what I want you to write down. This is the language to use. They would all nod and go, yes, 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 that is how we'll do it. And at the end of the month, they would give it to me. And of course, it would be wrong. And so I would go back and explain, no, 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 I want it done this way. And they would go, of course. And the next month, they would do it wrong again. And this keeps up until you finally realize the best way to do it is to give your BIs this daily sign-in sheet, tell them to put the hours and the dates, and after that, they can put whatever they want. It doesn't matter. You can do hearts and flowers and say you went roller skating. I don't care, because I'm going to take that information and I'm going to make up my own invoice. It may be handwritten, It could be a spreadsheet, it doesn't matter, but as the parent, you want to control the information. Here's an example of what not to do. Now imagine you're a CRA bureaucrat and you're having a look at the medical receipts and you see description of service that says team meeting. And you're scratching your head, you're trying to go, oh, team meeting, how is that a medical expense? Because that doesn't appear in the medical expense guide anywhere. Overlap with Leah, once again, that makes no sense. Travel. Anything that your BIs charge to you for travel is not a claimable medical expense. If you have to travel for medical treatment, that's different. You can claim that, and I'll talk more about that later. Equipment purchases are not a claimable medical expense. ABA therapy, maybe. We talked about that earlier. Next one I want to talk about is something called a personalized therapy plan. I will say up front that this is going to sound complicated. Bear with me for just a couple of minutes. It will actually, in the end, become very easy. It's not a complicated one at all, although it sounds that way. This is used for behavior consultant invoices. Your BIs coming in and working with your kids, you can call that tutoring. That's fine. But your behavior consultant is not there to tutor your kid. This is a professional service. They train your team, they write the programs. Can't really call it tutoring. Also, behavior consultants generally make their own invoices. And it's important to remember you still need a proper receipt. Feel free to make up your own, even if it's just one from Staples. The personalized therapy plan is something that must be designed for someone who is eligible for the disability tax credit. The payment is made to someone who is in the business of providing such services to unrelated persons. The therapy has to be prescribed and supervised by a medical doctor or psychologist, and the plan has to be needed to access public funding for a specialized therapy. Sorry, that's a bit of a mouthful there. To simplify it, the behavior consultant is going to give you an invoice. First of all, does it have to say personalized therapy plan on it? No, it does not. It will say whatever it says, and it just doesn't matter. The point is you're going to take whatever invoice they give you, you're going to get a receipt, and that now becomes a medical expense. There's no need to make it any more complicated than that. What items are not covered as a medical expense? Vitamins, supplements, over-the-counter medications, even if they are prescribed. Organic foods, materials and equipment used in ABA programs, administration costs, and travel expenses for therapists. If you have to travel for medical treatment and you have to travel over 40 kilometers one way, then you may be able to claim for travel expenses. Moving on from there, we can talk about childcare expenses. This may be something you're familiar with your kids before they were diagnosed or from their siblings. You can claim a deduction for someone who is taking care of your child. If you need to earn income from employment, you're going to carry on a business, attend school, or carry on research or similar work. Years 2020 and 2021 are a bit unusual. You do not need to meet these requirements if you're eligible for a COVID federal or provincial benefit for which you will receive a T4 or a T4E, or receiving employment insurance. So the child care expenses, you can now claim up to $11,000, which may be deducted by the lower income spouse if the child qualifies for the disability tax credit. The other thing that is removed are the age limits. For your other kids, there's ages that apply for when you can claim this, but if the child qualifies for the disability tax credit, there is no age limits for claiming this $11,000 per year amount. And I will mention that a child care expense is a deduction rather than a tax credit, so it may be worth more to you depending on your income level. The individual providing the child care cannot be a parent, it cannot be a spouse or a common law partner, or a person who is under the age of 18 who is related. What they say about this one, a person is related to you if they're connected by a blood relationship, marriage or common law partnership, or adoption. A brother, sister, brother-in-law, sister-in-law, or your spouse's or common law partner's child are related to you. Your niece, nephew, aunt, and uncle are not, according to the government anyway. Child care expenses may reduce the disability amount supplement. However, if you are using the tax software, it will automatically take this into account. Generally claimed by the lower income parent. Keep in mind that what I talked about earlier with respect to invoices and receipts will also apply to child care. There's another category of medical expense called attendant care. Perhaps you've hired someone to care for your child, such as a nanny. You can also claim house cleaning services, and everybody gets excited about this one. Back when we did the in-person talks, I would say this and I could see half the room sitting bolt upright going, really? We can claim this as a medical expense? And yes, you can. But here's the thing. If you're paying someone to clean your house, you need to have a proper receipt. You need to have proper invoices. A lot of times what happens with house cleaning services, you bring someone in, you pay them cash under the table, and in that case, you could not claim that as attendant care. You can claim as much as $10,000 per spouse and still claim the disability amount. Attendant care is a medical expense, and with all other medical expenses, for the entire family, they're lumped together and they're claimed by one spouse. And I will give a practical example of this one later on. The Canada Caregiver Tax Credit, formerly known as the Family Caregiver Tax Credit. This is a just because tax credit. The government recognizes as a parent of a disabled child, you have a higher burden. You can claim all this every year without any receipts. So it's a 15% tax credit on about $2,300. And what that means is it's worth to you about $340. And it's very easy to apply for, and I will show you that one later on in the example. You can backdate as far as the 2012 tax year, which was when the Family Caregiver Tax Credit was introduced. This one is a bit unique this evening. This is the only one where you don't necessarily need to qualify for the disability tax credit to claim this. And if that's the case, you just need a signed letter from your doctor to show that your child, because of an impairment in physical or mental functions, is dependent on others for an indefinite duration. However, no letter is required if your child has a valid T2201 on file. The Home Accessibility Tax Credit. You can claim up to $10,000 in renovation costs. The individual in question must qualify for the disability tax credit. The housing unit must be owned. It doesn't have to be a house, an apartment is fine, but you must own it. The renovations must allow the individual to gain access to or be mobile or functional within the dwelling, or reduce the risk of harm to the qualifying individual within the dwelling or in gaining access to the dwelling. And it must be a permanent part of your dwelling. So you can see the criteria for the renovation is very broad and quite vague. You may be scratching your head going, what could I possibly do in the house that would qualify? An example would be putting a fence around your backyard. If your child with autism is an elopement risk, you need a fence to contain the child. You can certainly put that in. It's a permanent part of the dwelling. You can most definitely claim that one. The following are not eligible: maintenance, appliances, home entertainment systems, financing costs, renovations incurred to increase the value of a dwelling, or security monitoring. Now, I always get the question every year, well, what about the installation of a security system? And I can find no reason that that would not be valid. If your child is a bolter, you want to hear if a door or a window is being opened before your child escapes out into the wilds. I think that would be perfectly valid. I haven't talked to anybody who's claimed that yet, but it seems quite reasonable to me. Now, there is also a BC renovation tax credit, and yes, you may claim that one as well for the same item. So in a sense, you're double dipping, you're claiming the same expense both with the federal and the provincial government. And I will show you how to do this later on. Can you backdate this? Why, of course you can. If your child was eligible for the disability tax credit last year and you put a fence in, by all means, put an adjustment in with the government and claim that as a renovation tax credit. Talking about the home buyer's amount, this is a $5,000 tax credit. When I say $5,000 tax credit, that means it's worth $750 to you. Normally, this is only for first-time home buyers. But if you acquired the home for the benefit of a related person who is eligible for the disability amount, and that home is more accessible or better suited to their needs, then you may claim the credit. Once again, that is a very broad definition, one that you can easily justify. You could say something as simple: we needed to move a place where we had more room to run a home team. Perhaps you needed a backyard with a fence to contain your child. There's all kinds of reasons. Essentially, every time you acquire a new home and you have someone who qualifies for the disability tax credit, you can claim this $5,000 tax credit, and you can do it again and again and again. Can you backdate it? Of course you can. If you changed homes last year, your child qualified, absolutely, you can backdate it. Now, the question of who should claim the expenses and the funding, which parent should claim it. From Autism Funding in BC, the website, there's some simplified calculations. You don't need to actually read this. This is on your handout. And there's a recommendation for every one of these categories, who should claim it. I won't go through all the math of explaining why. It's best if you just hold to this. The one that may change, and I'll talk about it later on, is the medical expense. Now, if you have not already signed up for the CRA My Account, I would strongly recommend that you do so. There's a lot of great information on there. It will give you information on payments coming your way. If you want to look up what the disability tax credit eligibility period is, you can also look at any of your assessments online. So if you haven't done that, highly recommended. As one example, here's the information. You may look up an individual that qualifies for the disability tax credit, and it will show you the years that are applicable. Audits. Yeah, this is something that strikes fear into a lot of people. For the most part, really not something to worry about. Most audits are not really what you would consider true audits. For the most part, it simply may be a request for information or receipts. So in this day and age, when you do everything online, you don't put receipts in. And as part of the government cross-check, they may come back a few months later and say, okay, so you're claiming $25,000 in medical expenses. Prove it. Send us the paperwork. I would recommend you have everything scanned. Keep it in your computer, hopefully with a good backup. And when CRA sends you this letter, you can go to the CRA My Account. You put in the file number on or the case number on from your letter, upload the documents, and you're done. It's just that simple. If you have all your paperwork in order, you really should not have to worry about this one. The easy way, of course, is tax software. And if you get tripped up along the way, the major software programs such as TurboTax or UFile will have guides to explain the process, who may qualify for what and how to do it. It will calculate all the credits and deductions for disabilities. So the tax software needs to know three things. It needs to know that the child qualifies for the disability tax credit. It needs to know who will claim the disability amount. And then you need to enter your medical expenses. I'm going to walk through a practical example later on as to how you're going to calculate this one. We're going to go through a sample tax return. We're going to take a fictitious family, parents Bob and Jane Smith. We'll say that Bob earns $60,000 a year, Jane earns $20,000, and they have two typical children. So if you plug all those numbers into TurboTax, you can see under the circle they're getting about $6,900 from the Canada Child Benefit. And you can see their total tax bill is just over $11,000. With a change in the family, they have one child, we'll call her Gwen, is diagnosed with autism. They now get approval for the disability tax credit. The family pays out of their pocket $5,000 for a behavior consultant. They pay out of their pocket $20,000 for additional therapy beyond what the AFU will pay for. The family is forced to buy a new home to accommodate the therapy program. And they also had to pay $2,000 to put in a fence to contain their child. This is from TurboTax, but the process for U-File is going to be similar. You go through the interview process and it will tell you claim for your dependents. You can see things like the disability amount transferred from a dependent, the Canada Caregiver Amount, and it would ask, would you like to review or claim any of these? And of course, the answer is yes. For Gwen, we've ticked two boxes here. The disability amount transfer. So that is, just to be clear, the disability tax credit from Gwen that's being transferred to one of her parents. We've also ticked the box for caregiver amount. For the disability transfer, TurboTax comes up with this page. Starting on the left-hand side, do you wish to make the claim for the disability amount transferred from Gwen? And of course, yes, we would. And then over on the right-hand side, it's going to ask who is going to claim it. And in this case, using that guide from your handout, we're going to select the higher income spouse, who is Bob. When you filled out the T2201 form, you would have designated one parent to receive this tax credit. Generally speaking, you should have put down the higher income spouse. If you put down the lower income spouse, it may not make a difference, especially if the lower income spouse does pay taxes. And by that, I include the withholding tax on your paycheck. To change the parent, it's a relatively simple thing. I would suggest the quickest way would simply be write a letter to the Canada Revenue Agency, have both parents sign it and say, we want to switch the disability amount transfer from Jane to Bob. You may be able to do it on the phone, get both parents on the phone. In theory, you could just select whichever parent you want, and it would probably go through no problem. I would tend to prefer to do it properly and contact CRA and have that changed. For the Canada Caregiver Amount, we're going to answer the questions on the right-hand side, all of them yes. The last question, it said, do you have a signed statement from a medical doctor? I told you earlier that if your child qualifies for the disability tax credit, you don't need that letter. But there's no selection there to indicate that. All you can do is just tick yes, and then don't worry about the letter. And we are going to select Bob, who is the higher income spouse, to claim this. So this is the summary we've got going on so far. And TurboTax has entered all these numbers automatically. We can see the caregiver amount. We can see the disability amount, both the federal and the provincial component. And you don't need to enter these numbers. The software does it for you. The payment profile, we're going to select Bob to claim two things. He's going to claim the first time home buyer's amount and the home accessibility expenses. And that's going to lead you on to this entry for home accessibility expenses. Enter all the information as indicated and the total amount, which is $2,000. For the home buyer's amount, it's simply a matter of answering the questions all the way down. And when you get to the very bottom, it says you qualify for the $750 home buyer's tax credit. It's kind of confusing because it's actually a $5,000 credit. It's just that the $5,000 credit is worth $750, clear as mud. When you enter the amount for the home buyer's amount, it will show you right here to enter $5,000. So that is the amount that you're going to put in the box in the bottom right-hand corner. The British Columbia tax credit Bob is going to select the BC Seniors Home Renovation Tax Credit. And this is really poorly done because this is a seniors and persons with disabilities home renovation tax credit, but they don't say that in TurboTax. It's an easy one to miss. Know ahead of time that the seniors home credit is the same as the disability home renovation credit. So we are going to tick the box for that one. Once again, we're going to enter this in exactly the same way that we entered it for the federal home renovation tax credit. We're going to put the $2,000 in. Medical expenses. Generally speaking, it's the lower income spouse who's going to claim it. And you don't actually need to understand the reason why, but I'll show you how the software is going to lead you through the process of getting the correct one. So Jane, we're going to tick the box for Jane to claim all the medical receipts for 2021. And we can change this later on. We're going to take all the medical expenses for the entire family, whether it's consultant receipts, which is part of the personalized therapy plan, tutoring, your drugs, dental, glasses, all those kind of things we're going to combine into one amount. On Jane's tax return, we are going to enter the figure of $25,000. TurboTax is going to ask if we want to continue and run the medical expense optimizer. And in this case, that's a very good idea. Right away when we bring it up, you notice that it has selected Bob to claim $25,000 in medical expenses. That's not what we put down. We had put down Jane, but the medical expense optimizer says, no, it's under Bob. And why is that? Right here, you can see that the total tax payable is just over $2,200 for the year. If you select Jane instead to claim the $25,000, let's have a look to see what happens to the taxes. In this case, the taxes are now over $6,000. It does become obvious that Bob is the one that should claim the medical expenses for this year. When we go to the next screen, TurboTax is going to have Bob selected, and now we realize that that's a good idea that he claim that. So what's the bottom line? Firstly, you can see the 2021 tax owing is $2,059, and the Canada Child Benefit has now jumped up to over $9,500. As you recall from our original typical family, there was $11,000 in taxes owing and $6,900 for the Canada Child Benefit. So what have we saved? $2,500 from the Child Disability Benefit. The taxes have been lowered by $8,970 and a total savings of $11,545. Is this going to make you rich? No. Is it going to pay for all your child's need? No. But it's $11,500 that you didn't have beforehand. So it's certainly a worthwhile process. I want to just go off on a tangent for just a couple of minutes here. And I want to make a very brief, and I do mean brief, introduction to the Registered Disability Savings Plan. Some of you may have heard about it. For those who have not, I will tell you that this dwarfs just about everything else I've talked about tonight. What you can gain from this program far exceeds everything else. This is the single most powerful tool for your child's financial future. You know, if you lie awake wondering what's going to happen to your child when they're in middle age and older, this is the plan for you. There's more information at RDSP.com. The federal government wants to give you money. You just need to take it. One of the beautiful things about this program is future withdrawals from this program will not affect disability benefits in BC. There will be no clawback to what they call the persons with disability benefit. So everyone today should have an RDSP. There's something called the Canada Disability Savings Grant. So for a family income below $98,000 a year, if you put in $500, the government is going to match that 3-for-1 and put in $1,500 into the account. On the next $1,000 you contribute, the government's going to match that 2-for-1 up to $2,000. So they can put into your account $3,500 a year for only a $1,500 contribution. If your family income is above $98,000, it's simpler. You put in $1,000, the government will match that 1-for-1 for another $1,000. What if you're low income? There's something called the Canada Disability Savings Bond. No matching contribution required. The government will put in $1,000 into this account if the family income is less than $32,000 a year. That is with no matching contribution. This bond is prorated up to a family income of $49,000. Interestingly, at age 19, the family income becomes that of a child with the disability. If your child has no income, they are now considered to be a low-income person. They can get all the matching grants, they can get the bonds every year. If you go to rdsp.com/calculator, they can run you through some scenarios, and I will show you two very brief scenarios. Looking at a child at the age of 4, family income below $32,000, and no family contribution to the plan. At age 60, the account is worth $207,000. Well worth taking. Example number 2, same age 4, this time the family income is below $98,000 a year, and the family contributes $1,500 a year for 20 years. The $1,000 yearly bond kicks in starting at age 19. And if you put it all together at age 60, the account balance is over $1 million. And that's for a total contribution of $30,000 on your part. Certainly a very valuable program. RDSP, if you go to the Plan Institute, they were the ones responsible for talking to the government, bringing this plan in. They run some excellent seminars on it. I'm sure that AutismBC has them in from time to time to talk about it. I would highly recommend them. They're great seminars. They'll show you how to set it up. They'll tell you all about all the rules behind it. But essentially, it is the most valuable thing you can do for your child. So it's very important that you start filing a tax return for your teenager starting in the year they turn 17 and continue to do so every year. And this is because of the Registered Disability Savings Plan. They look back 2 years to see what your child should be getting for grants and bonds in the Registered Disability Savings Plan. If you don't file, they don't have this information, and you will not get the grants and the bonds. That brings to a close tonight. My name is David Taylor. My email address is on the handout. I'd be pleased to hear from any of you. If you have questions, let me know how it went for you. I'd love to hear your stories, and I will hang around, answer any questions that you may have. So I'm just going to close this up and then we'll have a look at the chat and see what questions we might have tonight.
Thank you so much, David.
Oh, my
Yeah,
pleasure, Doc.
we did have a number of questions that came in. Most recently, there were multiple people who said the caregiver amount on TurboTax was saying that they could only claim for adult children. Is there anything specifically that we would need to do to be able to claim for children under?
The caregiver amount is actually, it covers everyone. It covers minors and it covers adults. It's simply that there's different amounts. If you input the age correctly for the individual and tick the box for caregiver credit, it should lead you through the process of claiming it. But it does apply to everyone.
Okay, and I know that there's a direct link in the handout for that that goes through, and it has an example in there as well. Okay, next we had if there was a blended family, could a step parent then also claim the deductions? Because if they're filing their taxes together, it would come up.
Well, I mean, so you can't claim the same thing twice. For example, the disability tax credit, only one person can claim that. And it does become complicated in cases of divorce and separation. And, you know, this is something that needs to be accounted for people breaking up by their lawyers to say, right, who is going to claim this? Because it essentially counts as an asset. The Canada Child Benefit generally goes to the lower income parent, normally assumed to be the female parent by the government. But you can't claim the same thing twice. You can only make one claim. The home buyer's amount, the home renovation cost, et cetera, et cetera. Only one person can claim those at a time.
Okay. When you're reapplying for the disability tax credit, you said this at the beginning, that you had recently done that. How much before did you start? Like how early did you start before starting that paperwork to reapply on a year that you knew that it was ending?
I would set up the appointment in the second half of the last year of eligibility, if that makes sense. So if you qualify for the tax year 2021, in the second half of 2021, I would be setting up the appointment and getting that out of the way. A lot of it depends on, do you have someone lined up to do it for you? Do you have a relationship with a specialist who knows your child and knows how to fill in the form? There's a great handout that you can get from asdfunding.com that will lead you through the process. And, you know, after all this talk, especially my level 1 talk about how to apply for it, my experience was almost embarrassingly easy because we had a specialist who knew my boy very well. And we asked if he could do this, and he just said, "Yep, no problem." And we didn't even go in for an appointment. He just sent us the paperwork back and said, "Here it is, it's done." And we looked at it, and yeah, perfect. And we sent it in, no problem, approved. So it can be an easy process if you have that relationship.
Yeah, okay. If you have a relationship with the doctor or the person filling out the form. Can I ask you a question about medical expenses? Have you heard of anyone that has tried to claim the private autism assessment as a medical expense?
Oh, 100% yes. Yeah, absolutely no question. That is a medical expense. It's generally done by, you know, the pediatrician, psychologist. Those are all registered medical professionals, and there's absolutely no question that those are valid medical expenses.
Okay, and that would go the same for occupational therapy, speech and language therapy, acupuncture.
Absolutely.
Okay. I had one that said, can the CRA go back and look at the higher earning parent? Sorry, let me scroll back up through the chat here.
So I think by that, Andy is asking, if the lower income person had applied for something and perhaps it wasn't advantageous, could they change this? And absolutely, you can change it. You can put this in a letter to CRA, or if you're talking about a scenario where perhaps 1 year one person is higher earning than the other, maybe you're talking about switching it back and forth. Once again, yeah, you can deal with this stuff. The best way is to put it on paper, make it so it's understandable, and have both parents sign the letter and send it to CRA. And that should take care of your needs.
All right, perfect. Thank you.
And I see one here, do both higher and lower income parents need to submit 2 separate letters to CRA for reassessment? Great question. I would tend to do everything together. And since you're talking about 2 individuals, you really should have both people sign it. But you want to be quite clear to CRA what it is you're asking for. If you're asking for one tax credit to be applied to one parent and one tax credit applied to the other, you want to be absolutely crystal clear what it is you're asking for. But if it's reasonable, that really should not be a problem.
All right. Ed, can you confirm that a child can have both an RESP and an RDSP?
I get that question every time, and I got to say, I love that question. I really do. So registered education savings plan and a registered disability savings plan. When I hear this question, to me that says, somebody's really trying to get the best bang for their buck and to qualify for everything they can. And I love that. I think that's absolutely great that you're thinking that way.
Brush your teeth.
The answer is you can have both. There's no reason you can't, that you have to limit yourself to one. Some of the things to think about, if you were going to be, if you only have enough money to perhaps invest in one registered program, the matching grants for the registered disability savings plan are much more generous. So you want to concentrate your effort there first. With respect to the RESP, you also want to have a look at whether or not there's any chance that your child could be going to post-secondary education. And if your child is very young, you may not have that information. In my case, we did start an RESP for my son when he was very young. We didn't know how he was going to turn out. And within 2 or 3 years of contributing to the RESP, it became painfully obvious that there's just no way that he was ever going to be going to post-secondary. So we stopped contribution for him at that point. What we did set up is we set up a family plan. So his sibling can now use not his grants and bonds, but they can use the income generated in that account for their education. So you don't lose money by setting up an RESP. And ultimately, if it is not used, you will have to return the grants and bonds, the grant to the government, but that is something that you wouldn't have had in the first place anyway. So you don't actually lose money in the process. I hope that answers the question.
Yeah, I think that's very great. Thank you. Jane has another question here about the RDSP. What can the RDSP be used for?
The way to think about the RDSP is it is a long-term savings plan. If you're trying to think about how can I get money out in the short to medium term, just turn yourself away from that because it doesn't work very well. There's something called the 10-year holdback rule. Basically, when you start taking money out, the government's going to start clawing back a similar amount that has been contributed in the last 10 years. So there's no advantage now. What you want to do is you want to put the money in, assume it is for your child's retirement. You start taking it out at age 60. Some of it is going to be taxable and some is not. The contribution is not going to come out as a taxable amount. The earnings will be, but it'll be taxed in the hands of an individual. And you don't need to specify exactly what it will pay for either. It doesn't matter. As long as it's for the benefit of the beneficiary, there's no stringent requirements here. So it's a great plan to have.
And I know we did talk with some people from Disability Alliance BC that had specialized more in our RDSP. So there's longer answers. There's other videos that are available, as well as like directly going to Plan Institute. Like it can be. I think there are some videos on there as well as autism community training explaining that benefit further.
I see another question going, can I claim the caregiver amount if my son is high functioning autistic? And yes, the first answer is yes. If they need support, for the criteria that I mentioned, you get a letter from your doctor saying this individual requires this additional support, then yes, you can claim the caregiver amount. Yes, you can backdate it to previous years. You need to include the doctor's letter along with your letter to CRA and going, I would like to claim for the caregiver amount, and you can go back as far as 10 years on that.
Nice, thank you. I know that you provided that one of the handouts had which partner should be the claimant. Do you have like a quicker response on like why the partner who earns more should be the claimant for the disability tax credit, or is that too complex of a question?
Well, here's with the disability tax credit, it's what's called a non-refundable tax credit. And it cannot reduce your tax below zero. So rather than sitting there going through the debate, what partner to apply it to, if you simply apply it to the higher income spouse, chances are you're going to get the maximum benefit from it. If you switch it to someone who may only works part-time or at a low salary, you may lose some of the benefit of applying. So rather than going through the math of deciding which one is better, simply apply that one to the higher income spouse. And that's the simplest way to do it.
Okay, perfect. Thank you. Well, thank you so much for pulling all of this information together, for giving us the handouts and the follow-up handouts. I think that it's very helpful to be able to come back and review those. I know that after these, people will process them, and you have shared your email so people can respond to you as well. I think you've saved a lot of people a lot of money throughout listening to these presentations, probably thousands and thousands of dollars over the year. So I'm really appreciative of your time coming in and sharing with our membership. And I will follow up with everyone and send a satisfaction survey out. So if you have any feedback for the AutismBC team or for David, please take 5 minutes, fill that out. It's very helpful for us to get that feedback and then know and be able to pass it on to our presenters. If you want to keep in mind other Autism BC talks that are coming up, you can check out our event page at AutismBC/events. I know on this Friday, we do have an upcoming presentation on preparing for big transitions. There's still some space available in that one. Thanks again so much for everyone. And thank you again for coming.
Thank you, everybody. It's been fun. Good luck with your filing.